forgot to turn my microphone on. I'm so sorry.
Small boy error.
So, how are you doing?
Very good.
Alrighty. Okay, well, how about we start then with you just introducing yourself, talking a bit about your organization, your role there, and why ethical financial advice?
Okay, great. So I've been in the financial services industry, for about 16 years, in many different guises. Previous to joining Path, I was a self-employed financial advisor. Previous to that, I was a stockbroker. And I found giving financial advice very rewarding. You get to meet lots of interesting people. No day is the same. But it came to a point where I was getting more clients asking me about sustainable investments and really sort of consciously wanting to know where their money's going. And it wasn't all about sort of the bottom line and making profit. And at the time, my superiors didn't have a huge amount of experience in this area, and I think that's probably the same for a lot. It was quite new. They seemed to think there were sort of only limited options on the market, and we had a sustainable fund, and that would suffice. It didn't really sit very well with me, and I don't think it sat very well with my client, just having the one sort of fund out there, sustainable fund. So I started doing my own research and found Path. And I found an interview with our founder, David McDonald, online. And I was just so taken aback with his passion, his enthusiasm, the ethics behind it all. So essentially, Path Financial was set up about 3 years ago to do everything they could to try and combat climate change through finance. David had done a lot of research and found that there were a huge amount of funds out there now, and you could have a full portfolio that was going to do good for the planet and good for people. And it didn't have to be this tried and tested old-fashioned way of traditional finance, which seemed to be more about making money for people than giving too much thought as to the impact of where that money goes and who are you actually funding. So I felt very lucky. I reached out to David. He was looking for advisors in the Southwest. Seems to be quite a hot spot here for green ethical finance, which is great. So I'm in a good location. And I'm able to do a job that I love whilst also having a bit more purpose, I felt, behind it. I can do something myself that I felt was making a difference. And I've got 2 young children, so I know they're going to grow up and learn all about climate change and the environment and the world that we live in. And I don't want them pointing fingers at me going, look, you knew all about this. Why didn't you do something about it? So this is my way of trying to make a difference, I guess, whilst doing a job that I enjoy. So yeah, I feel very lucky and very privileged. Meet lots of lovely people as well. The people that reach out to Path are all fantastic, and they all want to do their thing. And they've got similar values and beliefs to us, which is great.
Awesome. I really want to come on to what it looks like to use a financial advisor. Because a lot of the people that I speak to on a day-to-day basis, it isn't just wanting to do good in the world. It's kind of just wrapping their heads around what financial advice looks like and why they might need it, and just kind of understanding all the jargon and things they need to do. So it would be great to speak to you about that in a minute. But sticking with the ethical finance piece, what does that look like? How does ethical look different to more traditional finance or financial advice even as well? And yeah, can you talk about some of the themes as well that you might be thinking about when it comes to sort of ethics and values?
Sure, yeah. So I guess from our heart, the company is trying to, the ethical element comes in mainly to do with, I guess, where we're recommending clients invest their money, whether it be in a pension or an investment. But it also means, the company is run in the most ethical way as well. So we're very clear in terms of, our charges, the process. There's nothing is too opaque. It's all very clear and concise. the company itself has gone through the B Corp certification as well. So that sort of just shows people that we walk the walk as well as talking the talk. We employ people fairly. There's no discrimination. I'd hate to even imagine companies do that, but so it's quite transparent through the company. But primarily, we're speaking to clients and directing them to make sure that their money is having the biggest positive impact on the planet. What does that mean? So the fund universe, there's thousands and thousands of funds that people can invest their money in, and it can be quite daunting and quite overwhelming. So we do a lot of that donkey work and research to really filter through all of the funds, cut through all the greenwashing as well. There's huge amounts of greenwashing that's going on. Everything gets relabeled sustainable, ethical, green. Actually, when you take time to look at it, a lot of them aren't as green as you think. So we've gone through that painstaking process of going through quite rigorously all the funds to make sure that when we recommend them to our clients, they are as green as we say they are. So they've got that confidence that their money is doing good. They haven't been hoodwinked somewhere along the lines. So yeah, primarily it's knowing that you're speaking to an advisor that knows what they're talking about. They've taken the time to do the research. This is all we do at Path. So this is what we specialize in. It's not just a small part of the business that's been allocated to look after green sustainable funds. This is everything. This is all we do. And I think that's quite powerful for people. It gives them the confidence that when they come to us, they know they're speaking to an expert. And I think they quite quickly realize that after speaking with us, that we know what we're talking about, whereas other advisors maybe still on that learning curve, still need to put the time in to do the research, because it's not something you pick up quite quickly. It's a full-time job.
Yeah. So you've got these thousands of funds. A proportion of them are going to be sustainable, ethical, whatever their strategy is. What are the most common signs of greenwash for you when you are looking for the right funds for your clients?
I think because there's different shades of green, and so they can all get put in the same basket. So you've got some what we would class as so there's ESG funds, and that's quite a broad banner. Some companies can just negatively screen out a certain industry. So they may say, look, we don't invest in oil or tobacco or mining, or we just allow 10% income from those industries. But the majority of it is doing good, so that's fine. So we can say it's a green, sustainable, ethical fund. For the majority of people that we speak to, that's not enough, and it's very sort of clear cut for us. If we're going to invest in something, we don't want anything to do with those damaging industries. We don't want any income derived from those sources. So it is very much, we're only going to invest in industries that are and companies that are quite obviously set up to help the planet, help people. So that could be, the obvious ones are renewable energies, and that's the ones you hear about a lot. But there's also other companies that are linked to the UN Sustainable Development Goals, and it's very much about people as well. So it could be healthcare, social housing, education, sanitation, all of these other things that are major issues and concerns that we need to try and target and help. So the portfolios are quite broad in terms of the number of UN sustainable goals that they're trying to help.
Yeah. So ESG, that stands for environmental, social, and governance. And you're right. I think there is this sort of assumption right now, because there are so many ESG type funds, that ESG means sustainable. ESG means positive impact, when actually it doesn't necessarily. So yeah, it's been a lot of confusion recently. So I guess what I'm saying is people need to understand the terms and what they mean, because ESG, sustainable, impact, ethical, mean all different things, which is very confusing. But unfortunately, that's just the way it is at the moment, until I guess regulators really define what the different terms are
I
and what
liked
they mean.
it's quite a complex area, and it's trying to find
Mm.
ways to explain it in an easy way. And you can almost use a traffic light system, whereas red is bad, negative, damaging industries. Amber, I would say, are the majority of the ESG funds, and then green is positive impact, and that's the ones
Mm.
where they've gone through the ESG filter, and it's what I class as deep green investments, the ones that are having the maximum impact, whilst hopefully also generating a good return for people as well.
Yeah, no, that's good. Okay, I want to talk a bit about performance and returns. So, there's a lot of talk at the moment about how the oil and gas companies are making all of these profits. And, things like our pensions, how could they possibly avoid investing in those companies when they're making so much money? They've got this duty to make the maximum amount of money for their pension savers. Um, I mean, what's your view on that? Can we avoid those types of companies without compromising on decent returns?
Yeah, I think we've got enough evidence now to suggest that yes, you can avoid those industries, and quite often actually do even better over the longer term. I'm a bit reluctant to say that because past performance is no guarantee of future performance, but from what we've seen, and some of these funds that we're investing in have got a good decent track record now. You're talking sort of 5, even 10 years for some of them. So it's not like it's a new fandangle thing that's just come along and people are going to take this big gamble by investing in green technologies and green industries. There's a good track record there, and what we're seeing is actually there's been vast periods of outperformance. Naturally, it has narrowed somewhat if you're looking similar levels of risk, traditional against positive impact portfolios. They've narrowed somewhat recently because of the oil price spike, which is on the back of a war, by the way. So you need to sort of think of the bigger picture. Why has oil gone up? And that there's even more now reason we think to try and move away from this reliance on gas from Russia. We need to be generating our own sort of energy sources, and naturally as well. And the cost of renewables has come down a huge amount. So therefore, the companies are more incentivized to sort of invest in this way, and sort of certainly looking ahead. I think there's a huge amount of reason to be optimistic. There's more urgency. But yeah, and the other thing is banks as well. Of course, a number of the banks have been in the news for their financing of helping these fossil fuel companies, and that's now come to light. And people are starting to think, well, do I really want to bank with this bank or that bank if that's what they're doing? The next step on, of course, is right. Well, where's my pension money invested? And unfortunately, a huge amount of the time it will be in oil and mining because they're the default funds that these pension companies select because they reward their investors with healthy dividends. So, if people want to make profits, naturally, that's where they go. You can get those profits somewhere else and not have to damage the planet at the same time. So it's really a win-win scenario from our point of view.
Yeah, can you give us some idea just to help people have a real picture of the market and what it looks like and what's doing well? Are there any sort of industries that are, good industries that are doing particularly well at the moment? I know it's not guaranteed that they always will do well, but just to give an idea of where the alternative places are when you really don't want to invest in oil and gas and mining and tobacco and things like that.
I mean, there's a whole mixture, and some of the some bigger companies that a lot of people would have heard of, like Ørsted or SSE, are some of the bigger players in the renewable energy sort of sector. But there's also a number of green bonds and social bonds that are quite low risk, but still generate a good return. So you've got things like social housing, and a bond is effectively a loan. So you're loaning money out to sort of housing associations for people that need sort of accommodation that's been adapted for their special needs or whatever it may be. But that rent is then covered by the local government. So it's a very low cost investment that makes a good return. So as well as you've got your renewable energy companies. There's also lots of other sort of projects and smaller companies which are thinking about sort of the next stage and have huge growth potential. I mean, there's also some portfolios will hold Tesla, and everyone's heard of Tesla. They've come in for a bit of flack recently, but you've also got battery companies. And again, this can sometimes be a bit of a controversial one. There's different shades of green here, but batteries that go into electric vehicles is seen as progress. We're moving away from the more polluting diesel vehicles to hopefully the next stage. And with further investment and research, these battery companies will hopefully be able to charge the batteries quicker, hold charge for longer, recycle old batteries, so therefore recycling old minerals, won't necessarily have to keep mining the same minerals. So there's lots of different areas and projects. Some bigger, well-known companies, some smaller ones, but there tends to be a good mix, and we can cater for sort of the more cautious client right up to the more adventurous as well.
Okay, that sounds good. And just in terms, okay, let's go back a bit. Why should people start thinking about investing if they haven't already? Because I'm speaking to a lot of people that don't get it, don't understand it, are scared of it, and I'd like to reassure them that it's a great thing to do and to try out. And I'd love to have your view on that. What do you say to clients that are a bit nervous about investing, or people that you come across, and what kind of returns could somebody expect over, I don't know, say like a 5-year period, just to give like a ballpark figure?
Yeah, I mean, there's a number of reasons for why someone should invest, and quite often people might be investing and not even realize it, because majority of people now have a workplace pension, so that money has to go somewhere. So that money's being invested, even if you don't realize it. And maybe that's a good place for people to start, is go and have a look at their workplace pension, see where that money's invested, and then start seeing what other fund options are available. But ultimately, investing is a good way of trying to grow your money and for it not to be eroded through inflation. Inflation's such a big thing right now. If you've got inflation at 10% and you're getting, say, 3% at your bank, your money's effectively losing 7% each year. So by investing the money, you're hopefully going to try and generate a slightly better return. And by investing in shares, you're investing in companies which are in a way inflation proofed, because they will then put up their pricing and their growth is somewhat linked to inflation, rather than a fixed rate of return from an interest rate, which is rarely going to change. Your investment should hopefully pick up and grow as markets grow. And people shouldn't be put off in terms of, oh, well, that sounds risky. Again, we can put together portfolios for people that are quite low risk, right up to the other end of the spectrum where people can be quite adventurous. And it really depends on what their objectives are. And for younger people that are investing money in a pension, they might not need access to that money for 20, 30 years. They can afford to take a little bit more risk. The majority of people certainly can, because they've got a lot of time on their hands. And typically over the longer term, equities, so shares, investments, have shown to outperform every other sort of asset class as long as you give it time. It's very difficult to give you an average figure, because it really depends on sort of someone's attitude to risk. But typically you can expect sort of 5-6% a year in terms of an average return after fees. There's going to be some really good years in there. There's going to be some downers like we saw last year. Pretty much anyone that had any money invested anywhere probably would have taken a bit of a hit. And that's why you should always take a longer term view with any investment, because you're going to get ups and downs. But ultimately it should prove to do quite well over the longer term.
Okay. So that sounds good. So what do I want to ask you? So for people that haven't been thinking about their finances or their sort of wealth management or whatever you want to call it at all, but should, because let's just say they're 35, they haven't started saving, they don't even have an ISA yet. Like, what are the first steps that they should take to start getting better at managing their money?
I think you don't know what you don't know. So speaking to, you know, an expert is the first place to start. And people like myself will quite often be happy to chat to someone completely free of charge, just to have an informal chat, really, sound check, sort of see where you are with things and give you a bit of free guidance to begin with. And typically, as scary as it might sound or as boring as it might sound, doing a budget and just a sense check really on what's coming in, what's going out, is the great place to start. And not many people do it, and because it's not a lot of fun, but it's very rewarding. And once you've done it, you'll get a much clearer sort of handle on where your money's going and what's affordable, and you might be surprised. And then you'll see if you've got a surplus coming in every month. And then you can say, okay, well, great. Well, I can budget then X amount to go into a savings account, and X amount maybe to go into my pension, and X amount for an emergency fund, because I don't know when the car might break down or the boiler might go. So budgeting is a really good place to start, I feel. But, like with anything, speaking to someone that does it day in, day out, like myself, is also a great place just to start that conversation and sow the seed. You wouldn't do your own dentistry. So if you want to look at finances, come and speak to a financial advisor, a financial planner like us, and we can sort of help give you that start.
Yeah. So let's talk about that then. So they have got to the point, they think that they can afford a financial advisor. They want to have that relationship. What does it look like? So what does it cost, and what would be the process they go through with you, say, the first 1 or 2 meetings?
Yeah. So firstly, I like to call myself a financial planner. There's people either called financial advisors, financial planners. And when I started off, I wasn't really sure what the difference was between the two. I would describe myself as a financial planner because I like to work with clients long term. So we're talking about long term plans, whatever they may be. Quite often, majority of people are aiming for financial independence at some point on the horizon. Don't like to call it retirement because that sort of invokes a picture of slippers and pipe, and a lot of people love what they do and just don't even want to retire as such, but just get to a point where they're financially secure and they can choose to spend their time doing whatever they like. So it's all about sort of mapping out what are your goals, what are your objectives, how are we going to get there, where do we start, cash flow modeling, seeing how long will your money run until it runs out. Okay, well, this is what we need to do to top you up. Financial advisors I sort of see as more of a one-off sort of, okay, I need this product or I need this service, and help me with this one bit of advice, and then that's it. The relationship sort of ends there. So financial planning is very much an ongoing. We'll check in with you every year, see how you're going, seeing if your objectives have changed. Ongoing tax efficiency sort of measures, making sure we're making use of all your allowances and getting you to your end goal in the most tax efficient, quickest, best way, whilst helping the planet and helping people along the way. In terms of costs, we do quite a lot of upfront work for free. So when we speak to clients, we really want to get to know them. And that involves, a couple of meetings, whether it be face-to-face, over Zoom, over the phone, filling in a fact find. So putting down on paper, who you are, where you live, income and outgoings, assets, liabilities, when you want to retire, be financially independent. Risk questionnaires, ascertaining if you're quite risk adverse or quite adventurous or somewhere in the middle. And then assessing really what you've already got, in terms of assets. May be a lot, may not be a lot at all. And how do we use those assets to sort of make sure they're as sufficient as possible, make sure they're having the maximum positive impact on the planet, and doing the job that you want them to do, and they're sat at the right level of risk. So it's an assessment of where you are, and then shaping things to get you to where you want to be in the smoothest way. In terms of fees, if a client wants to come on board and we think we can help them and add some value, then it would typically be 2% as an initial fee of the assets that we then start to take on and manage. So it's not 2% of the total wealth of the client, it's just the bit that we're looking after. And then ongoing, it's 0.75% of those assets that we're managing. And that covers everything from our point of view. So all ongoing advice and active management of the investments, and as much or as little interaction with the client throughout the year as they like as well.
Okay, great. And for those people that would like to just learn a little bit more about finance and financial planning and getting their head around some of the jargon, some of the terms, so they feel like they can have a quality conversation with you. Is there anywhere that you would point them to? I mean, is there a favorite book or books or websites or anything like that that would give somebody a solid grounding?
I mean, a lot of clients, I will try and educate them myself and sort of cut through all the jargon and tell them sort of in the most easy way to understand and sort of break down any of those sort of barriers. In terms of reading books, and I wouldn't say there was one book or anything that really sort of stood out for me. Google is a fountain of information, and typically if there's something in particular that you want to find out a bit more about, it is as simple as just typing it into Google and you'll get bombarded with information. But again, if that's too overwhelming, or the terminologies being used are a bit confusing, then I always just, I'm happy to speak to my clients and go through that with them and hold their hand and bring their level of knowledge up to a level where they're happy and comfortable, so it doesn't sound or feel so daunting. Because this is what we do every day. Very easy for us to forget. A lot of these words and acronyms that we use are completely alien to other people. So it's just remembering that, and more than happy to sort of talk to people and bring their knowledge up a step or two as well.
Yeah, sounds great. Okay, well, last couple of questions now then. What do you think are the sort of the big themes or the big things that are coming up in sustainable finance and investment? What are we going to see in the future? Right now, it feels like there's a bit of pushback against ESG, sustainability, especially in the US, where they really love fossil fuels, and it's been a bit of a challenge for the industry. And I think tech and renewables seem to have been the sort of big alternatives to fossil fuel companies or harmful industries more generally. What do you think is next for the industry, and what would be the kind of the big investable industries you see rising up as well?
Yeah, I think, like you say, it's come in for a bit of flack recently, and especially
Mm.
ESG has maybe sort of taken a bit of a hit. And I think a lot of that is down to people generally not understanding it as well as it could have been. But that's not their fault. It's the industry's fault for not explaining the terminology and the differences, really. So I think the regulators need to come in and really sort of make it clearer for everyone in this field, what the differences are between the ESG and positive impact and ethical investing and negative screening and all of these factors, because they're all sort of lumped into one. And some of the arguments do have some validity to them. So it's about sort of almost repackaging and rethinking about how these investments are sort of advertised and promoted. And I think if you went back to the drawing board and really just focused on positive impact investments, from my point of view, and I'm very biased, but I don't see any sort of negativity to that. And I think if that's just promoted in the right way, I don't understand why anyone wouldn't want to do it. It's when you've got companies that have got sort of quite high ESG scores, but ultimately it's hard to justify what they're actually adding in terms of a positive impact, and that's where maybe some of the negativity comes from as well. I wouldn't say for me there's any one particular area or sector that's really standing out as a maybe a hotspot for investment this year or next. I think people should just continue to speak to the experts and invest in a broad range. And I seriously think that, the sector and this area will thrive and do well over the coming years, because there's the urgency there. I think with the regulator maybe helping to clear up a few areas as well, that's only going to help. And general awareness. I think if more people knew about this, the majority of people would be interested. It's just getting that knowledge out there and speaking to people that is really the main challenge I think we've all got at the moment.
Yeah. And just to kind of clarify, I think what you were saying there about the regulator, they're at the moment looking at developing some labels for funds so that people can easily spot what's sustainable and what isn't and what's somewhere in between. And yeah, the education piece, I completely agree with you. But I have been heartened recently by just how many people are having these conversations.
Yeah.
I was lucky enough to get to speak at a TEDx event recently, and the room was just packed of people that were really interested in this, how they can look after their money better and do it in a really ethical and sustainable way. So it feels like it's happening, and there's a real buzz around it now. So I guess we just keep going with it.
Yeah, well, that's the thing, isn't it? The majority of people out there are doing something, whether it be recycling, cycling to work, flying less or not at all. They've gone vegetarian or gone vegan. They're doing all these other things. It's just they haven't quite thought about, okay, where's my money invested? Where's my pension money invested? And they don't realize the huge impact that has. And that's the next thing. And I think, like we're seeing, the banks are now being shown up for where they invest their money. I think naturally people will start thinking, okay, what's next? Well, pensions, investments. And I think that's the natural progression, hopefully. So, yeah, lots of reasons to be positive.
Yeah, I think so too. And I completely agree. I think it's going to be the next big thing. It's there, it's on the horizon. Okay, so last question now. And I ask this to everybody because I think people who are talking about sustainability and climate change and inequality and all of those things and thinking about all of those things seriously all the time can be a bit of a downer and difficult. So I wonder if you could share some of the things that you do to keep your spirits up and to keep a bit of joy in your life.
I think daily gratitude is something I've been doing for a while, and just sort of remembering actually, how lucky we are to live in the world that we do. And I know that, like you say, there's huge amounts of reasons to be unhappy, but we're actually also very, very privileged and very lucky to have a roof over our head, to have food on the table. Yes, it may be a bit more expensive than it was a year ago, but there's still food and water and from that point of view, you've got friends and family and, lots of very simple, may seem like simple things that we take for granted that we should be very, very grateful for. So that's something I like to do every day is a grounding in terms of, showing a bit of gratitude and reminding myself sort of how lucky we are and how lucky I am to work with people that are like-minded and share the same values and beliefs. And I think we are making a difference. It may only be quite a small difference at the moment, but by speaking with my clients and moving their money out of industries and things that might be having a negative impact, putting them into something that's positive, actually over a year, that's a big difference. That's a big change. And if we can continue to do that, then we're making strides all the time.
Yeah, absolutely. Well, that's it. Thank you so much for having this chat. I think people are going to find it really valuable. And we've talked about all the things that, I know people want to hear and the questions that people want to ask. These are the types of questions that I'm asked a lot. So people really appreciate it. Thanks for your time.
No problem. No, thanks for having me.